Hello, everyone. Jesse Webb, Traders Pro. Market conditions remaining bullish in this bull market. We're definitely at the upper end of this range. Let's talk about that a little bit here today. Here's a chart. This is a chart of SP 500 or SPY, which is the ETF. We've been moving from these lows to these highs essentially in a straight line. And one of the things that we've been talking about the last few updates is this indicator here, where we're looking at a spike in momentum, and then we see a decline in momentum, and we see a spike in breadth. And ideally, if these bump up above that blue line, something like this, those are indications of markets getting a little bit tired, and we'll see if we start to see that. Currently, we did see a big, nice spike in buy-sell ratio, so we're sitting back up now at 4, almost 5. We're at a range where we've been at before historically, where we could get a reversal. This move back here in January was a lot more significant, and you can see how high that can get, 6, 7, 8, 9, 10. But we're at that 4 range. So we could see, it's been a really strong market right here. We're seeing lots of, FOMO trades, fear of missing out to the upside. But now we're at an area where we want to start to see some caution towards that upside. We're seeing sentiment also not spiking the sentiment location can reach significantly higher than where we are currently, but we also see divergence oftentimes on this, where we get the market price moving a little bit higher, but this line is not moving higher. So we're kind of stuck right here with lots and lots of bullishness and lots of positivity to the upside, but towards the upper end of that range. Let's look at current markets as we've got bonds moving higher. Let's look at S&P 500. That's really the one I wanted to focus on, because we are at this area right here where we could break out. If we could break out and hold this range, hold this upper range, maybe go out to that 1-year time frame of this 450, even this 453 support area, because we kind of bounced off that. We could rally up, but if we can get a close up above that 459, 460 area, and that just may create this some more volatility and some ups and downs, but a support area. We'll watch that to see. We've got multiple support areas now that we can be focused on. One of this 453, another major one down here at this 446, and then another major one at 440. So all of these areas can act as support if we get a retracement, but whether or not that retracement happens quickly, or if it just chops lower, or if we just get some volatility at these upper ranges, is yet to be determined. If we take a look at bonds, which have been a big factor in this last move, TLT, we saw a big move on Friday. Good solid bar, retraced back down into that support area, and now working its way back up again. All positive things for equities as well. When we see that bond market rallying, interest rates coming down, that's really what has been moving the market for the last 18 months, is all of this talk of inflation and interest rates. Watch to see if bonds continue that overall rally. Let's look at sectors here. We're seeing sectors still moving, nicely to the upside. The issue now on all of these is going to be, where are we at in these trends? Are we extended to the upside like most are currently? And we're seeing some others that are lagging here. Energy, utilities lagging, as we're seeing transportation, technology, industrials, really everything moving to the upside aggressively. So really bullish conditions here, but again, we're at the upper range of those bullish conditions. So why, in terms of what that means, just essentially smaller position sizes or no new positions, manage that within your overall trading plan. New buy list in the muscle stocks, let's take a look at that. We've got AUGX, which is a medical information stock, looking like it wants to break out right here, $5 stock. Lots of resistance right here. If it can break up above and get up above that $5.50, $6 range, could see some nice continuation on AUGX. And let's see, there's a couple of others that were interesting patterns. This one, BBIO, had a big gap, a little bit over the summer, been retracing now, and now looking like it also wants to continue that overall momentum to the upside. That's a good looking pattern, relatively early in that new trend, with a good solid confirmation bar on BBIO. And then Carvana was also an interesting pattern here. Nice retracement off of that 50618 area right in here inside of this box, reversal, and then it's been holding this area, and now we've got a big confirmation bar in that location as well. This stock certainly can be a high flyer. It moved from this $7 range, and it's done it before a couple of years ago. And so watch for some volatility on CVNA for over the next few days. That'll do it for today's update. If you don't have full access to the site and software, you can sign up with the link below. We look forward to having you. Have a fantastic day today.